Hello, everyone. Thank you for joining us today. I'm Marche, the webinar director here at Advice Chaser. We're so glad that you're coming here to participate in our educational presentation. So a couple of items I need to go over before we start, a little bit of legal housekeeping. Advice Chaser, the host of this webinar, is not a registered investment advisor. We cannot and do not give financial advice. Today's presentation is for educational purposes only and cannot be considered advice for any person's individual situation. Advice Chaser regularly hosts informative webinars, such as this one, featuring a variety of knowledgeable professionals, many of whom are licensed advisors. Any opinions, ideas, jokes, or principles expressed by presenters are their own, and however true, funny, or interesting, are not endorsed by Advice Chaser. Please do not act on the information here today without consulting a qualified financial professional. We're thrilled to bring you this educational presentation today. Attendees are muted, but we do encourage you to ask questions using the chat box, and the presenter will answer those queries during or after the presentation today as appropriate. If you ask a question in the chat box, go ahead and leave your contact information as well. If we can't get to your question during the event, we'll make sure someone reaches out to you after today's event to make sure that gets addressed. Again, we want this experience to be as educational as possible, so please don't hesitate to ask for clarification or expansion of the material. I'd like to introduce you to our presenter today. Leo Wong is a fiduciary financial planner with Grant Vest Financial Group, specializing in new client acquisition and market research. Leo, the youngest of three boys, was born in Malaysia and immigrated to the United States at a young age. Leo and his family went on to successfully own and operate several restaurants throughout central New Jersey. Leo graduated from Christian Brothers Academy and Monmouth University with a BS in finance and currently resides in Monmouth County, New Jersey. About his reasons for becoming a financial advisor, Leo says, "My passion for becoming a financial advisor stemmed from the seeds that my parents planted when they came to America in the early 90s. As a restaurant entrepreneur, my family worked 72 hours per week that provided food and shelter for the family for over a decade, and as grateful as I was for my parents instilling work ethic upon my siblings and I, they never developed a retirement nest egg for themselves. As a first-generation immigrant, I can relate to those who work hard to provide for their family, but lack the knowledge or insight to plan for retirement. And that's what brings me a sense of fulfillment when I'm able to help families plan for the future." So Leo, we've done several webinars that specialize in help for federal employees, educating them about the various aspects of that retirement planning for federal employees, and I know this is going to be another great one. I will refer to our attendees to our website where you can find the recorded webinars that Leo has presented as well. So I'm going to go ahead and turn over the time to you, Leo. Go ahead.
Thank you, Marche. Glad to be back for another series of retirement transition planning for federal employees. And I thought this was coming an opportune time here because of what's been going on with the federal market and their back office with retirement agencies being backlogged due to the COVID environment. I want to make sure that everyone that is going to be retiring at the end of this year or upcoming year know what to expect. And one of the benefits of what I do for a living is that I specialize in going to federal facilities, whether it's Customs and Border Protection, VAs, or even IRS centers, to educate their members about their retirement transition. And these are the most common things that I come across and great education that I think everyone needs to hear and be prepared for in order to have an optimal, smooth retirement process. So thank you for having me today and going over that. So in regards to our agenda for today, I'm going to keep it very high level, but very informative. And I'm going to start off by helping you understand the retirement paperwork that is necessary for you to process, what is required and what is optional. I'm going to talk about the timeline that you can expect from when you should be filing to when you can expect your first interim pension check and everything in between. The most common one that I do get a lot is, what is the best time to retire? So I'm going to kind of debunk a lot of those information and some of the misnomers out there. And then for anyone that is within these three agencies that I do currently cover actively right now, whether it's the VA, the CBP, or IRS, those are the largest agencies out there that are federal employees. So hopefully I'll be able to address most of the people that are on this webinar. I'm going to talk about the retirement platform, which is GRB for most people, and then Robbus for the CBP chapter. All right, so diving into the retirement paperwork portion here. On the next slide, you'll see that here are the requirements. It is really simple once you know what you're doing. The confusing part is you just don't know if you're filling out the right paperwork or if you are filling out enough information. However, if I had to boil it down into two sections, it's the left section, which are the required paperwork, and the right section that are optional. Now, depending on the agency that you're with, there will be varying degrees of additional paperwork, but for all agencies, these are the essentials that you need. Starting off with your SF3107, which is application for immediate retirement. The second one is your SF2818, which is also known as your continuation of life insurance coverage, also known as your FEGLI. And then the last one is your W-4P, which is your withholding election for your pension payments. All of these paperwork can be simply found on OPM, or your retirement agency should be able to either send you the paperwork or have a platform for you to use to complete in order to generate these type of paperwork to be able to submit for retirement processing. Now, on the right side, there are some additional paperwork, but they are optional, and they are the SF3102, which is designation of beneficiaries for the pension, and of course, SF2823, which is designation for beneficiaries of FEGLI, right? Your life insurance. Those are optional, but if you do want to update those, you can incorporate that with your total retirement paperwork submission.
Hey, Leo, we did have a question. So you're saying that these required and optional ones are for every agency, but some agencies have additional paperwork. Is that correct?
That's correct.
Okay.
So next part I want to dive into is, what is the retirement timeline? What can you expect in regards to preparing for some paperwork submission to afterwards? Now, I'm going to spend a little bit of time on this part because this is probably the biggest part that a lot of people have a hard time getting information on, because unfortunately they just don't do a good job of publicizing this to pre-retirees. However, for a majority of agencies, you want to start preparing or submitting your retirement paperwork 90 to 120 days prior to your retirement date that you want to get out. So for folks that are retiring at the end of this year, this would be the optimal time to be submitting your retirement paperwork, or even as early as end of September, because it falls within that 90 to 120 day window here. So that would be optimal because that gives your retirement agency plenty of time to do their due diligence in getting your service dates together and everything in between in order to then submit to NFC, which is the department that does your final payroll closure, as well as also issues out your annual leave. And then, of course, the final step goes into OPM, which is Office of Personnel Management, which is your final destination and will be your department or agency that you deal with for the remainder of your retirement for any retirement update needs. Now, once you do submit your retirement paperwork, traditionally you'll get assigned a retirement specialist within a 2 to 3 week window after your submission of retirement paperwork. A lot of agencies are using the GRB platform, specifically the VAs as well as the IRS, but each agency will be a little different. So make sure you know what that difference is before you submit your retirement paperwork. But your retirement specialist is the one that is going to be taking your case and working on it in order to submit to NFC, which then later goes to OPM. Now, in regards to your annual leave, this is something that I want to put some time in clarifying. Your annual leave is AL, and you could expect a lump sum payout if you have any annual leave left when you retire, approximately 4 to 6 weeks after your retirement date. So it sometimes may come with your final paycheck if it's early, but it might come after your final paycheck in a separate check and a lump sum amount paid out. Now, because some of you that are planning accordingly might have quite an abundance of annual leave cashed out. So some of you may know that on an annual basis, you could carry 240 hours into the following year, but you could also accrue whatever current year of annual leave you have with whatever you carried from the previous year and have it as a lump sum payout. I believe the maximum amount you could accrue in a year for annual leave is approximately 208 hours. So for people that really max out, that's 208 plus 240 is the amount that they could cash out in a lump sum at the end of the year when they file their retirement paperwork. In terms of taxes, you will be withheld at the highest taxes as well. So please plan accordingly with that. But I've seen people that cashed out $10,000 or even $20,000 for a lump sum payout for their annual leave before. So that is essential for you because that is going to be the money that you're going to use to kind of help you, quote unquote, bridge the gap before you get your first pension check, which then would dive right into my fourth item here, which is when can I expect my what's called interim pension check? That typically in this current time frame is roughly around 3 to 4 months is what's anticipated. However, can it be a little bit longer? Yes, especially if you messed up on the retirement paperwork, did not hand in something, or there's something fell through the cracks. It can be longer, but on average, I would say 3 to 4 months before you get your interim pension check. Now, I also get this question a lot. What is my interim pension check? What is that? Well, that is a estimated amount, approximately 60 to 80% of whatever your eligible pension is will be paid as your interim pension, right? Now, they do that because they still need a couple of more months after you retire to really calculate everything and make sure they have everything correct in determining your full pension check, which comes typically around 6 to 7 months after you retire. So you'll get in other words, you'll get a couple months of interim pension check before your full pension check kicks in. Now, when you get your full pension check, that is the full amount that you're eligible to collect. And that will also be when you get your back pay or retroactive amount of all the interim pension check, including also all the first couple months that you never received the pension in a lump sum amount. And from then on, you'll get a normal amount for your full pension. And that's also when your first supplement will kick in as well. And for
all right. So yeah, there was, before you go on to that, there was a question. Yeah, they wanted to know, so if they calculated the interim, off, will they also add that that correction to your first full pension?
Yes. So they will retroactively pay you for the months that they missed and the interim portion part that they did not give you the full amount on. So that will be
ever, go ahead.
Addressed when you get your full pension check.
There's also a question, is that sometimes do they overcalculate that pension for the interim?
The government is not known to overpay much.
Okay.
So And then, of course, for anyone that has a qualified retirement before the age of 62 and you are eligible for a first supplement, that is also when your first supplement check starts. Now, they will pay you a lump sum amount for all the months that they missed on, but then you also start getting a monthly amount in addition to your full pension check from then on if you qualify for a first supplement. That is probably one of the biggest things that most people do not know and is not publicized anywhere. But this is strictly just something that we know through trial and error for all the years working with federal agencies and people qualifying for first supplement. So I see a chat come in from Richard here. Do I need to address that question?
Yeah, go ahead. Yeah, they said, I don't understand the supplement checks. Can you talk about that?
Yeah, so if you don't know if you qualify for a first supplement check, most likely you don't. This only qualifies for people that have a qualified retirement before the age of 62. So in other words, if you are MRA, minimum retirement age, plus 30 years of service, you could be retiring at age 57 with 30 years of service, but you don't qualify for Social Security. So you actually get an extra pension check paid by your agency, but they take the calculation off of Social Security. I think I do have a slide in one of my other, I do have another webinar that is in the library that I encourage this person to go see, that will talk about how to calculate the first supplement and who qualifies for it. But typically you need to have, you have to have what's called MRA plus 30 or 60 years of age with 20 years of service. You could collect it for those 2 years leading up to 62. But moving forward though, talking about the retirement timeline, I have a slide here that is taken off OPM website that talks about what is the claims process and the average processing time. So as you see, there are a lot, if you look back from January 22 to March 22, they had 13, 12, and 10,000 applicants come in for retirement processing. So that's normally when it gets backlogged a lot. And that's when a lot of delays are probably more often than not. However, as you see through the rest of the year, it's, I guess, below the 10,000 number, but still pretty active. For September and November, you could expect around the 8,000, 9,000 range still. But I think the important thing to also see is that the current inventory as of August of this year was 29,000 that they're working on. So the average processing, it says, is about 87 days on average so far. So you could anticipate around that time, if not a little bit longer, as we get into year end, when a majority of people are retiring.
That's really interesting.
Yeah, it is. And a lot of people retire at the end of the year, Marche, is because that is the quote unquote optimal time, which I'm going to talk about later on. But this year, it so happens that your end of 26, your pay period 26 ends on December 31st, the last day of the calendar year, which really mashed up perfectly.
Okay. Let's go ahead and talk about the best times to retire.
So this will probably be the second most popular question I get for a lot of folks is, should I retire at the beginning of the month, at the end of the pay period, at the end of the year? What is the best time to retire? Now, the best time to retire is actually very simply put at the end of a pay period and at the end of the month in conjunction. Now, when I say that, it's hard to conceptualize. So that's why I have some things for you to look at that's on the screen that kind of visualizes it for you. So in regards to, let's talk about August, which I know is past. If you notice in the month of August, you have pay period 16 and pay period 17. So when I say at the end of the pay period, if you want to retire in August, the end of the pay period is August 13 and August 27th, right? So that's one factor. So those are two dates that are great to retire, but also at the end of the month. So at the end of the month, it's actually August 27th is the best because it ends on the last day of pay period and towards the end of the month. Versus a lot of people might just say, oh, I'll just retire at the end of August, which is 31st. Nothing wrong with that. In fact, most of your retirement specialist counselors will tell you to do 31st. But the downside with the 31st is that it doesn't let you accrue the sick leave and annual leave, plus the TSP matching of the 5% that you would get because it cuts off in the middle of a pay period. It has to end at the end of the pay period to get all those accruement of your TSP matching and your AL and SL accrual. So August 27th is actually the best in that scenario. But a lot of counselors will say 31st because that's the least amount of days that you have to wait until you get until you're eligible for your first pension, which if you retire August 31st is technically September 1st is your first eligible pension date. So that's the only reason why 31st would make sense in this scenario. But what's a few extra 4 days to qualify for a pension when you could get the full accruement for that pay period of 17? And if we look at the, go ahead.
Yeah, so obviously this is 2022, but they could just go ahead and look at their calendar and see when those pay periods end and see when it's at the end of the month and when the pay period ends. That would be ideal.
Right. Let's go through another one. December. This is going to be the most popular month for everyone to retire this year. Pay period 25 ends on the 17th, and pay period 26 ends on the 31st. So it's the optimal holy grail time to retire because you're ending the last day of the year with the last day of the pay period. So a lot of people are going to be choosing a date. Nothing wrong with that. But just remember, you're going to be part of that bottleneck of retirees at the end of the year. So anticipate a little bit more of a lag time before you get your first interim pension check. And for December 31st, as the third bullet point states, your pension starts the first of the month. So everyone's pension eligibility will start January 1st. Does that mean that they get their pension that day? No. You might have to wait 3 or 4 months, if not even 5 months, before you get your first interim pension check, which I'm going to cover a little best practices in my final thoughts slide as well.
All right.
All right. So, yeah, let's talk about paperwork submission here. So as you see here, this is catered specifically for VA employees, all right, Veteran Affairs, and they have a agency called Retirement Shared Services Office. Now that is your retirement agency that processes your retirement paperwork. Now they can also do a lot of other things, as you can see there. If you need help with getting your deposit or redeposit, meaning you left service, you came back, or you have military service deposits, military time that you want to buy back to incorporate into your pension calculation, you do that with RSSO. But the probably big one that people do request from them is a retirement estimate, which you could do by either calling the 866 number or emailing them directly from your government VA email. And they will be able to send you an estimate by email or by mail as well on what you could expect in terms of your deductions for any benefits you want to keep into retirement, as well as your pension calculation and anything above that. Below there on the bottom, I add a little extra fact for you that the Department of Veterans Affairs Human Resources did a modernization effort, which consolidated all the retirement specialists for VA employees into a single unit with RSSO based out in Topeka, Kansas. So you can no longer sit down face to face with anyone at your VA to discuss retirement paperwork submission anymore. It all has to be done with RSSO, either over the phone or the platform that I'm going to show you next, which they launched, which is GRB platform, which is basically their way of developing a platform to consolidate everything into one systematized platform for their employees to use, which I think is on the next slide if you want to move forward. But before I do talk about the GRB platform, I do want to make a note here that your retirement agency will still accept old school retirement paperwork submission. So if you want to print out those forms, fill it out, sign, date, and send it to them, they'll still take it. But there's going to be less accountability for that paperwork, and it might even slip through the cracks for that. I'll share this quick story about that actually. I had a VA employee retire recently this summer, submitted all her retirement paperwork, and it was even on GRB. And she retired, but she was great financially. She wasn't in a hurry to get the pension check. She just enjoyed her retirement. Well, I checked in with her a couple months later, and she still hasn't received her pension check. And later to find out, she submitted all the paperwork correctly, but her retirement specialist actually retired, and her retirement paperwork basically was in limbo.
Oh
And
no, that's rough.
and I'm like, whoa, you need to bang on doors and scream at the top of your lungs and get this expedited, because you're owed a lot of money, and that they messed up tremendously on that. Obviously, she's get in the process of fixing that. But that's a prime example of how things can slip through the cracks, and I'm going to give you some best practices about that at the end. But I would also recommend that you request a retirement estimate benefit report from your agency, retirement agency, prior to completing your retirement paperwork, so you also understand your elections as well. All right, so I'm going to talk about that a little bit at the end here. But in regards to your GRB retirement platform, as you can see here, this is what it looks like. There is a link that you need to use. It's on the intranet. Or you could reach out to RSSO and they'll send you the link that you need to click on. But as of right now, you can only submit your retirement paperwork on the GRB platform on a VA government computer. So you need a PIV card, log in and be able to do it. However, if you have someone that isn't near a computer or have access and you work at a VA facility, you can still call the service line and do paperwork submission manually. You'll just need a little bit more guidance and hand-holding. But that's the picture of the GRB platform. So this is what it looks like when you log in. You click on the retirement tile, as you see on the left side. And then once you click on that on the right side, it shows you what your estimates look like. This is just an example of one. What your high 3 estimate is. And where the blue circle, oval circle is, the retirement dashboard is there as well. So you could click on that, and that's what brings you into the next screen of completing your retirement paperwork in order to then submit to RSSO, which then will start the process of assigning you a retirement specialist in 2 to 3 weeks, and then so forth and so forth that I covered earlier in the retirement transition timeline. All right, so there are also some changes. This is one of the other changes, and this applies only for Customs and Border Protection Agency, CBP specifically. They have launched a new portal as of last year, and it's what's called Robbus Portal, right? Robbus is their retirement agency. They're based in Washington, D.C., and same thing. They have a portal now that you have to go in, submit a retirement ticket, and submit your retirement paperwork on there. And then, of course, go through the process of getting assigned a retirement specialist, which then will take your case and work on it and be in communication with you in completing the retirement paperwork and anything outstanding that they need and whatnots. But there will be essentially a caseworker that will help you through that process of making sure all the paperwork that is needed is together, and going through the processing, go through the process. So you could access this on the Robbus web portal within the intranet of your system as well. But once again, if you don't have that, you can call the number or email Robbus directly to get that link in order for you to have the proper accessibility in submitting your retirement paperwork. All right. So for my final thoughts here, a couple of things that I want to kind of give you best practices and maybe share a couple other stories with you as well to kind of drive home the point of the webinar here. And that is the number one thing I would write down if I were you is to check in on your retirement specialist every 2 weeks if you don't hear from them. You ever hear that saying, trust but verify? It holds the most weight when you're retiring. And you want to make sure that you're doing all the right things. You make the submission and you're in contact with them, but you just want to just keep a pulse on things because no one's going to be more serious about your retirement than you. So make sure that you're staying on top. Every 2 weeks, just check in if you haven't heard any correspondence, just to see where you're at. The prime example that I shared earlier about someone's retirement specialist retiring mid-processing does happen. And sometimes they don't catch it. And things just happen where you need to just stay on top of it to make sure that things are moving along in a timely manner. The second thing I would advise a lot of people is to make sure they have a minimum of 6 months of monthly expenses available when they are going to be retiring. Right now, if you're not in a fortunate spot of having such access cash available in a savings or accessibility, what I would say is maybe you'd consider taking out a loan before you retire in order to have that capital set aside for financial emergencies, but also more importantly, just to kind of smoothen out the transition so you're not stuck in a financial bind just because you're still waiting for the interim pension check to come in. One of the things that I get asked about the most is what happens to my outstanding loans when you retire? And I want to address this because this is a cause for a worry for people. And I even heard some people not retiring because they didn't know that they could retire with an outstanding TSP loan.
Okay.
So, which is true, you can. I'm sorry, did you want to chime in?
I did have another question, but I think I'll hold it till after your comments. I was just agreeing. Yeah, I've heard that too about people just holding off on retirement, knowing that they have a loan.
So let me address how that works, and then I'll chime back to you because I know there was a question in the chat as well. So a TSP loan is when you borrow money from your TSP and you're taking payroll from money out of your payroll to pay it back on a biweekly basis, right? There's no taxes on it or anything. You're just borrowing from yourself and paying back yourself at a G-fund interest rate. However, when you are retired, you can actually, number one, retire with a TSP loan. There's no rule against that. But when you retire, you have two options to elect with what you want to do with that TSP loan. I'm going to use an example of 10,000 as a rounded number. So the two options are A, you can either write a check for the outstanding balance of the 10,000, send it to TSP, and you're made whole and you're all set, right? That is the most common natural thing to think about. The second thing, B, that you can do is actually take it out as a distribution. In other words, you do not pay back the $10,000, but you take it as a distribution. In other words, when you file your taxes for the year, they will add in that extra $10,000 into your taxes as earned income. Meaning all you have to do when you file your taxes is pay the taxes that you owe on that $10,000 that is now no longer a loan, is now classified as a distribution. Mm-hmm. Therefore, if you're in a 20% tax bracket, 20% of 10,000 is $2,000. So you're paying $2,000 in taxes when you file your taxes, when you take it as a distribution versus needing to write a check for $10,000 to pay back the loan. Does that make sense?
Yeah, so as long as you're doing that tax planning, that burden can be alleviated.
Yes. So when I tell people this, smiles come to their face and they're like,
signs of relief.
I can actually retire. I thought I had to pay it back first. I'm like, no, it's okay. We could retire, but let's make sure you can pay for those taxes as well.
All right,
My God,
let's go ahead. Oh, did you have any more?
no,
Go
go
ahead.
ahead.
Yeah, no, I wanted to address this question. And this is a comment I'm sure you've heard before. The whole process seems so confusing. Is there a timeline that you can refer people to make sure you're not missing any steps as you go through the process?
Ooh, your retirement specialist or HR should be able to give you kind of, a document or some best practices or just things, or you could go on opm.gov. There's a lot of resources on opm.gov. Click on the retirement, and there's a lot of things, a checklist that they could give you on pre-retirees that they could kind of adhere to and get an idea. But on a bias basis, I would say work with a financial advisory team, right? Someone that specializes in the federal retirement space. That's actually one of my ending points, is to speak with what's called a chartered federal employee benefit consultant specialist. In other words, it's a fiduciary financial advisor that actually specializes in federal benefits and understanding your TSP, retirement process, FEGLI, pension, all of that. So that will be your best bet, because then we can help you with that transition as well. So before we actually complete this, go to the final, the slide here. There is one thing that one more story that I want to share with you. And that story is one of my clients recently retired a year ago. And this person retired. I helped them with completing the retirement paperwork, submitting it to their HR person to get it processed. And we already elected all the options that he wanted according to the needs, and submitted. Everything's great. Got the pension check, got interim, got the full pension check. Everything's great. However, it wasn't until the full pension check came in, and he noticed that they were still taking out the premiums for his FEGLI option B 5 times, which we elected to drop on the retirement paperwork. So that was an error made. And it's pretty pricey for 5 times option B when you're older. I think this person was paying maybe 200 something out of pocket per month for it. So once we saw that, I helped this person reach out to their OPM and show them the retirement paperwork, which we have evidence of, that was submitted, that they made an error. And what they did was they went back to the date of when his retirement was, and retroactively paid him for all the premiums that he was paying into a benefit for that he meant to was supposed to be dropped. And then of course we got that fixed and got all the money back. So this is a prime example of how, if you're not confident in going through the retirement transition yourself, because most people only really retire once in a lifetime, so you might want to get it right. That working with a federal retirement specialist like myself is really holds its weight in gold there, to really make sure that everything's done correctly and you have a team that is able to guide you through that process.
All right, Leo, we really appreciate your insight today on this complicated process, like one of our commenters said. I want to thank everyone for being here, and also for the organizations that have made this webinar possible today. Here at Advice Chaser, we're all about helping you find a financial advisor who's a great fit for you and your financial questions. Our matching service is free to you. All you have to do is click on the link to find an advisor at advicechaser.com, and each of our advisor partners has agreed to offer a free initial consultation to anyone we introduce them to. Again, from Advice Chaser, thank you so much for coming. We'll see everyone at another webinar soon. Goodbye, everyone.